Join us now, Dan Skelly, head of market research and strategy at Morgan Stanley Wealth Management. Kelly and Skelly. You said it's like Kelly with an S. That would be Kelly's.
That's right. It depends on where you put it, Joe.
Or Dan's.
Yeah, it always does.
Dan's Kelly, like Ruth's Chris.
Did anything change? Let's start in the last week for you in terms of watching, or how about in the last 3 months?
I think the market, Joe, is starting to get a sense that at times this White House escalates to de-escalate. And I think the market got more conviction around that recently. And then I think, frankly, when you zoom out and think about what's going on in the U.S., we're going through a productivity boom right now. And there's a lot of good stories underlying the day-to-day narrative as well.
Is it really possible just to use that as the main thing to look at? Is there any way to get around what's happening on a daily basis in the Strait of Hormuz and oil prices?
I don't want to diminish the conflict going on by any means, but when you think about it, a year ago, April, we were talking about another big policy snafu perceived to be at the time, and here we are not thinking about that as much. And so I think, look, at the end of the day, you're going to go through these challenges day to day, week to week, but the underlying narrative in the U.S. is one of innovation, one of technology, productivity, and one of pretty strong earnings. And we're getting a test of that right now in terms of earnings season.
Ed Yardeni talked about record margins and record earnings. And that's what usually dictates what happens in a stock market. You pick your multiple and then multiply it times the earnings. And that's what it doesn't necessarily immediately translate $100 oil into lower earnings.
That's right. And look, the tools and the services and all the platforms we have surrounding us are faster and more accessible than ever. And so I think that's what challenges us, Joe, in terms of remembering your tried and true playbook. The multiple's off 18% since last fall. And so absent any type of big economic recession, which we do not foresee, this is a good opportunity, we think, broadly.
What's your buddy thinking at this point?
I got to give Mike credit. Mike was saying that we would have a drawdown, but it would be manageable. And look, peak to trough, we had a 9% correction in the last several months. And the market, we think, has bottomed. Look, I'm not going to say we don't retest, but it's hard to understand what new information the market learns that's that draconian when we already know the motive is to have a ceasefire and to move on beyond this.
Do you hear Roger Altman last hour? I mean, you hear what Roger says and you go, of course he's right. He says, yeah, he thinks the blockade is the right thing to do, but you have to have the patience to stick it out. And that patience, he thinks, will probably need to extend more than a little while, and which would, he thinks the market's kind of not waking up to that.
Yeah, Kelly, it's an interesting point, and I would argue that thus far it's been a 2-on-1 game, and maybe what the blockade does is reference the idea that global players, Asia, Europe, others might have to pay more attention because arguably their oil exposure is even more concerning and more damaging than it is for the U.S. So maybe the blockade is yet another one of these instances of escalate to de-escalate.
Yeah, he thought the lows were in. Yardeni did it. You think the lows are in as well?
I agree. And one of the other markers for that is that the VIX has come off, the volatility index has come off substantially off of that 30 level. And usually the volatility has to peak before markets can bottom.
And you layer on AI and all the things with productivity improvements just on top of everything else you were talking about. And I guess a bit of a tailwind from stimulus from the big, beautiful bill.
Yeah, look, that's a great point, and people are not talking about it enough, Joe, but we are going to see continued affordability measures and other stimuli ahead of the midterms, so that's an offsetting factor for the higher gas prices at the moment. Let's come back to AI, because this truly is the story. We were talking about tariffs a year ago. We're not talking about as much. I guarantee you we'll be talking about AI the next time I come on this program. And look, here's what I'll say. My colleagues in MS Economic Research, Michael Gapin and others, have looked at 200 years of innovation. And every time they look at new technology cycles, it's beneficial to jobs, it's beneficial to productivity. And whereas a lot of people are thinking that a lot of jobs are going to go away, that doesn't necessarily hold true.